in a single day of trading. Biggest tumble of all these, they call them the Magnificent Seven stocks today. Just a huge decline. Amazon, just about 8.9% for Amazon. Meta, which is Facebook, 8.9. Then, of course, the high flyer for the chip world, NVIDIA, flying high today, 7.8. So those are all declines on the trading day today. Tech getting hit harder than the rest of the market, but the market itself was demolished in many ways. It was a really, really rough day. Here with us now is the chief market strategist for Apostrophes, the host of the Drill Down podcast. We're going to drill down right now with Corey Johnson. Good to see you, my friend. Good to see you.
Don't blame me, just because I'm in town.
I got to blame somebody. This is, that was ugly. I think I said it at the top of whenever, we came on for the show today, that we knew today would be ugly, and but that was rough.
The market's been telling us for a long time they don't want these tariffs. The market's been telling us for a long time that the 150-year history of tariffs, they know what happens.
Yep.
The president has been saying that's not true. The market is telling them what they expect to happen with these companies and with the economy.
Why, number one, is tech getting hit harder, do you think, than everything else? And number two, it's interesting to me as well that the United States as a country, its market, is getting hit harder than other countries.
There's a couple of reasons. So, as you mentioned, the Magnificent Seven, there are a handful of big tech stocks that control the index. NVIDIA is a bigger part of the index than random tech company that makes wires, right?
Yeah.
Apple is a huge part of the index, more than some little company that makes semiconductors. So when Apple and NVIDIA take a big hit for reasons, it tends to affect all of the market. The reasons we're concerned here, most iPhones are made where? In China, where we've now got effectively a 50% tariff. Most NVIDIA chips are not made in China, they're made in Taiwan.
Right.
But there's a huge tariff on those two, and that is a huge product for our economy.
So the interesting, one of the things we were trying to figure out in real time yesterday, and I'm glad you used that number 50, was, what is he really saying here? So there was some question about how they even came up with the rates. There seems to be some sort of a mathematical problem.
I don't know if we would give him credit for that.
I don't know if it's, yeah, right. So, but anyway, it wasn't the exact tariff rate. There's some other thing. So anyway, they come up with this number, and they say, well, we're going to charge half. But for China, the number, whether it's legit or not, was like 34. And then we're like, wait, hold on a second. It's already 20. So then they asked, Bassett and all these, well, is that on top? And they're like, I think he said something like, yeah, I think so. So it's like, all right, now it's 54.
This is a chainsaw, not a surgical decision.
Yeah, it was much more than people thought. I mean, people thought he would be aggressive, I think, but on Wall Street and other places, this was.
I think there was some hope on Wall Street that this would be used as a negotiating tool.
Right.
But when you see blanket tariffs on China, but also on Madagascar, and you think that this really is not sort of careful and calculated. This is just a blast.
We talked about earlier, those islands where they literally have no people.
Penguins.
Yeah, like a polar bear and a penguin. And
penguins.
The penguin's got to pay 10%. I mean, you laugh, but it's like, is there any rhyme or reason to it?
So here's what we know happens when tariffs happen in countries: that inflation goes up,
yes,
GDP goes down, and productivity goes down. And so the market is not making a political jump in the market because people can't buy as much and buy as many things as they might otherwise buy. And the market clearly understands what has happened with tariffs for the last 150 years.
There are all sorts of people on, because that's what we do here. We have, which is, I'm not joking now, being serious. We have a lot of different people, a lot of different voices on the network. That's the whole point of this network.
That's why this show is so good.
No, I think it's thank you, but I think it's a real reason why the network is so successful. And then you get some people that do argue, and they make coherent arguments for why the president would do something like this. And it essentially is the long-term gain for this short-term pain type of situation, that they think, we were getting ripped off, as the president says, and that longer term we're going to be better off, manufacturing jobs are going to come back. Now,
so what I would say the stock market is saying right now, and the stock market is saying, we don't see plans to bring manufacturing back to the U.S. We don't see a plan to go out and encourage. Some of these things are going to hurt the manufacturers in the U.S.
But they, Trump talks about, like Apple says, we're going to spend $500 billion, and these other companies said we're going to spend billions and billions in the U.S. And essentially, that's what he wants.
I think we're not seeing actual plans to build up manufacturing in the United States. We're just seeing the tariff is going to make this happen somehow magically on the other side of it. But what we know is going to happen, and it might happen, it might not. We know is going to happen is consumers are going to pay more for the things that they buy in the United States. We know that people are going to lose jobs and the risk of recession. Every single bank on Wall Street has now raised their expectation of a recession to higher percentages. Not all of them predicting recession, but all of them saying it's more likely now than it was 2 days ago.
Probably more likely than not. Because everybody was like 30%, 40%, and then it was funny because Mark Zandi was on from Moody's literally when Trump was speaking today. He is great, and I said to him, you're already at 40, Mark. Now think about it. He started the year at 15. Okay,
15% chance of recession.
this year.
And now he's at 40.
And then now he's over 50 because he like last week says, oh well, this is not looking good. It's going up to 40. So when Trump came on, I asked him, right? I said, you want to go higher or lower? He goes higher. And he said, well, he obviously has to do the actual calculations,
Yeah.
but it's probably over 50. You see, J.P. Morgan, Goldman's at 35. They're probably all higher than this now.
Well, let's think about what that means for people, right? What that means is people losing their jobs. What it means is some children going hungry. It's not just a number going up and down on a screen or a statistic coming out of the Bureau of Labor Statistics.
Yes.
There's a real human impact when we're talking about a recession. And, it's people. And I was at a conference this week. It happened to be optical networking and technology. But the CEOs were saying their customers were starting to pull back a little bit, or at least say that their customers were saying, we don't know what the tariffs are this month. We don't know what the tariff of the day is. That was the phrase said on the stage at one of the panels I was at by a big CEO. He said, I don't know what the tariff, my customers don't know what the tariff of the day is. So they're not rushing to make decisions. They have an excuse to wait, and that doesn't help the economy.
No, that speaks to the uncertainty, and you can't make major decisions. I want to get to that last topic. We teased it when you were doing your strut out of our control room, which was very impressive. Very well.
I was just walking. That wasn't strutting.
Well, I don't know, but you were pretending not to be on camera.
I think Travolta,
and all that.
That's a strut.
Very well executed. So we said we were going to talk about TikTok.
Yeah.
So now there's a Saturday deadline. There was news this week that apparently Amazon made a bid. I don't know if it was reported it's not being taken seriously. The OnlyFans founder has made a bid. So,
So which ones do we take seriously and which ones don't we take seriously?
Yes.
I think the most important name to watch here is Oracle. Because Oracle's Larry Ellison and Safra Catz, the CEO, I think they're terrific, and I know these people, and they're big supporters of President Trump. And they have been. Safra Catz was on the transition team for the first Trump administration, and Oracle hosts all of the TikTok servers in the U.S. They don't want that business to be up for bids. So by getting involved, Oracle can keep the TikTok business on their servers.
Okay.
They can help them grow their big data centers and their data center growth planning around TikTok. And guess what? TikTok's a really good business.
Yeah, it is, and it affects a lot of like small businesses. You're a great guest, by the way. This reminds me of a story I was going to tell earlier. We had a guest canceled today. You know why? It was like a TikTok influencer. Do you know why the guest canceled? They wanted to be told the questions before.
Yeah.
And you know what? Which we don't do for any guest. But you know what my answer would be? I don't know what they are.
I know this guy, Tom Keene.
Ask you.
This guy, Tom Keene, says, it's a conversation. It's a conversation. Things are happening in real time.
So I don't know what the questions are. So that's why I try to keep them from you. But anyway, it says there, the only thing in the proverb says is Corey Johnson, thank you. So, Corey Johnson, thank you.
You're welcome. Thanks for having me.
Corey, on that.